Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So hey, welcome back to Accelerated Investor. I want to thank all of you guys and tell you how privileged I am that you're listening to this podcast, that you're spending time with me, that whether you're in your car, you're in the gym, you're going for a walk, you're social distancing and you're going for walks in your neighborhood, whatever you're doing, however you're engaging with Accelerated Investor and with me and my guests, I just want to say thank you. I'm so privileged for all the ratings and reviews that we've gotten. Thanks for sharing this on social media. I hope you're staying safe. I hope you're taking care of your families and enjoying some of this extra time that we have had with our families while we're sheltering in place. What I've done is I asked my good friend Jack Petrick, Jack's been on our podcast before, to hop back on to teach you guys and talk to you guys a little bit about some of our apartment deals. So Jack, welcome back to Accelerated Investor. Thanks for jumping on.
Thanks for having me, buddy. Appreciate it.
Yeah, you bet. Give you guys some framework, some background on Jack. Jack and I met over 5 years ago. Our daughters played Little League soccer together when they were just 5 or 6 years old. They were on the same team. Jack and I coached the team, had a great time. My daughter, Juliana, Jack's daughter, Emma, are great friends. My son, Dominic, and Jack's son, Cole, are really close buddies. Matter of fact, I think they're upstairs right now talking on their iPads. Couple of knuckleheads. Jack is also an amazing real estate investor. I met Jack when he was a full-time firefighter and he owned about 15 or 20 single-family rentals. Today, Jack is a full-time real estate investor, owns over 640 units of multifamily and single-family and apartment buildings, over 640 units, and has raised over $6 million. And so, Jack, just for our audience that hasn't met you before, just give us a little bit of background foundation about you and about your kind of pivot from being a firefighter to real estate and your passion for real estate. And then we're going to introduce everybody. Jack and I already recorded a call for our investors. Jack and I own 164 units together, an apartment building in Shaker Heights and Cleveland Heights. And we're going to give you guys, we're going to peel back the onion and give you guys a listen into an actual investor update that we did for our investors that invested. We raised about $2.2 million for this deal together. And we'll give you guys insider access to that recording. So Jack, again, just tell our audience, if they don't know you, a little bit about your background, your history as a firefighter and a real estate investor.
Absolutely. So became a firefighter, paramedic shortly out of high school, came across the book Rich Dad Poor Dad, and it just really spun me on my head. So I initially had an interest of building custom homes, was not the cash flow model. We did that for a number of years up until 2008, and then I got to witness every large builder and developer that had been around for multi-generations just get wiped out.
Right.
And in that time, single-family houses had completely collapsed, so I started transitioning to single-family rentals. Thankfully, the construction background that I acquired was very handy at that time, as we were buying extremely distressed properties. Houses that sold for $120,000, we're buying them as low as $4,000 and then doing a full rebuild to them. But that experience allowed me to be able to do that. So I spent quite a few years without mentors. I honestly didn't know they existed, and I knew nothing about private capital. So it was just one house after another, and kept on doing that. I was a full-time firefighter paramedic for the city of Strongsville, which is a suburb of Cleveland. And I also thought that success was doing as many different things as possible. So
right.
We did an MLM business during that time.
Fitness, you guys sold wine. It was I bought wine from you guys.
Oh, it was
great.
I learned a lot through the experiences, but not from the business itself. But it was all part of the different layers of building who I am today. So But it's funny looking back. But my wife's a nurse practitioner. We have an NP business. We started another NP business. We're homeschooling our kids. We're doing like 5 things. And then, like I said, initially when my wife was trying to get my daughter into soccer, I'm like, we don't have time for this. She went around my back. We met Josh, like game changer. It really was. So, Josh invited me to come along into Shrek, into his masterminds. And that's really when I started getting the very first mentoring and learning about focusing and looking at what's a distraction, what's an opportunity, understanding and first learning about private capital. And that was the first of many other things I got involved with. I got involved with some other masterminds, did a lot of audible books on Amazon. We shared an account for a little bit too.
Yeah. I remember when you bought like your first apartment training, you're like, I think I want to get into apartments. Yep. And I didn't have a lot of experience in apartments at that time, but I was really good at raising money. And you were all fired up about that. That was a couple years ago. And you went from, again, your portfolio of maybe 40 roughly single families to now 640 total units, really focusing on apartments. I've been one of Jack's primary private lenders. We've done a lot of first mortgage senior debt on a number of buildings. And then we also have raised capital together on a couple buildings for actually the down payment and raising private money through private placements and things like that. So it's been an amazing journey for both of us over the last 5 years or so. I think the event we did in Cleveland, like the first mastermind I had that you were at, that was down at the Doubletree in Cleveland.
Yes,
I want to say it was like the summer of 2015, I think. So it was almost 5 years. Almost 5 years.
It was a long time ago. And I didn't even know how to dress for the event. I came in like t-shirt and shorts. Everybody else, really nice business apparel. I'm like, I'm so out of place. And at one of our masterminds, you said something that I will never forget. And it was, actually it was two different things. The first one was, and we were talking actually to our friend Darren, and we were saying that your job, it's not a life jacket, it's an anchor around your neck. And at the time being a firefighter, like it was inconceivable to leave at 15 years. You would always take it 25, 30, 35 years. You've got a pension, you've got healthcare. Well, my laundry income is more than my pension and healthcare right now today.
Laundry income from washers and dryers and quarters.
Washers and dryers, the quarters, but it was hard. It took a lot of time, a lot of masterminds, a lot of discussions, a lot of personal development, which I learned a lot about personal development through our failed multi-level marketing businesses. But it's changing the programming of our mind. And that was then all of these were pieces and layers that kind of helped make the transition. And then once I really started doing more apartment training and really started to understand it, and after I spent over a year on it, it's as simple as this, and I'll dumb it down to this. Commercial real estate sells and is valued based upon net operating income, which is income minus expenses. So what we're trying to look for are properties that have ineffective net operating income through low rents, low occupancy, deferred maintenance, absentee owners, or terrible third-party managers. And those scenarios are everywhere around us. Mm-hmm. And another thing that you had said, this was with your brother Mark, but if we're not finding enough deal flow, we either have to expand our market or marketing. And every time that I'm like, I can't find enough properties, enough deals, or there's not enough, we got to look elsewhere. The problem came to, if I were honest, of how many deals did I look for? How much money did I spend? What did I do? We weren't putting the time in.
Right.
So those were two huge takeaways that I'll never forget from being a part of Shrek.
Yeah, that's awesome, Jack. I appreciate that. And so, Jack's been building his portfolio on the owner operator side and really building his portfolio. I've been primarily focused on getting access to capital and partnering with Jack, partnering with our other friend Tim, partnering with my other friend George. And now, obviously, this virus stuff is exacerbating this recession that we knew was probably coming in the next 6 months to 24 months. And so we've been kind of preparing for this over the past couple of years. And now you're going to see a lot of apartment buildings and single family portfolios, people that fall into distress because they overpaid. They paid not a wholesale price like we pay, but they paid a retail price for these properties hoping that they would cash flow or hoping that they would appreciate even more. And they're not going to have the cash flow or they're not going to have the liquidity to keep these buildings, and they're going to lose them. And so Jack and I are really going to be active over the next, let's say 3 months to 18 months, looking for assets to buy, looking for deals. And the thing that I'm excited for is that over the past year, we've pivoted away from lending and private lending and hard money lending and getting liquid so that we have the cash available to now go pounce on these opportunities that might be 10 or 20 or 30% off of where they were just 30 days ago. It's really amazing. And so, Jack, I know you're positioning yourself to buy up a lot of assets as well as we are. We'll partner on a bunch of stuff, and so we're excited for that. I want to let our audience kind of peek behind the curtain here of this investor call that we did. Again, to frame this up, I'm going to have Jack give you the details about this building. But this is a 164 unit building that Jack found off market. Jack and I partnered on it. I helped bring in some capital, do some deal evaluation, some underwriting and investor relations. And we've owned the building now for about 9 months or so. And we just did an investor update that we're going to send to our investors. What I wanted to do was actually add that to this recording and let you guys hear in real time how Jack and I are talking to our investors. But before we turn on that piece of the recording and add it to this intro, Jack, why don't you just frame up the deal? Tell us a little bit about how you found it, what we bought it for, what the plan was for stabilization.
Absolutely. So we found the property through our Marcus and Millichap broker relations. We essentially, and this is kind of important, so I'll just talk about this briefly. We made the introductions and tried to start a relationship, but at the time, I had not closed the deal with them at this point. So, showed up, communicated well, returned phone calls, text messages, and we had a deal that we were close to getting. We were basically the top 2 offers, and we ended up losing that property. Instead of getting upset and frustrated and mad, which is things I've done 10 years ago, because it's like, oh, it's the last deal, whatever, fine. There's another one. There's always another one. Yeah. So the next deal came around, we closed on it, had a hiccup at the end, but we were able to work through it and really use that to create a really good relationship. And ever since I was able to close on that deal, it's opened the floodgates to bring in off-market deals. But you're not going to get off-market deals until you close the deal and you prove yourself, because that broker is putting their reputation and their commission on the line when they go back to the seller and say, I've got an offer for you. It's not like residential. It's a whole different animal. So you have to prove yourself. You have to show you're a person of integrity that can close. So basically, I got a phone call one day, deal hit the market, off-market property in Shaker, Cleveland Heights, 164 units, purchase price of $9.2 million. We had about a $2.2 million capital raise. We had to look at it immediately, and if we liked it, we had to put $50,000 of non-refundable earnest money day one, with another $100,000 behind there. And just to frame this up, previously to these deals, I had been closing smaller deals. This capital raise was 6 times larger than what I was normally doing, and the down payment of $150,000 was a pretty big bite to take a bite off that, with $50,000 being non-refundable day one. So it definitely took, it was a lot of growth, this property. I remember when the offer accepted the offer, we're at a coffee shop. I'm like, great. And like, crap. Oh my God.
Yeah.
It was,
pressure, man. Pressure. Got to have some stones. Got to have some stones to do that.
The deal, I got to say, like, really took me to the next level, because the size of this deal, $9.2 million. I had to bring in, investors to help build my balance sheet. We had $2.2 million to raise. We had $150,000 that was going to be going hard here shortly. This was a deal that really stressed me out significantly, because it really stretched me. But because we executed, because we were able to get the capital together, it really leveled me to the next level. It basically advanced me 5 years over the summer of last summer.
Yeah, phenomenal. So let's peel back the curtain. We're gonna close out this intro, and we're gonna attach the investor update right here. I think you'll love it. For all of our audience, take a listen. This is an actual investor update about 6 to 7, 8 months into this project. And right in the middle of this coronavirus scare, you'll hear Jack and I talking about a real deal that's with a real update, with real people, with real money on the line. Take a listen. I think you're going to really love it. Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. So hey everybody, all of our investors, how are you? This is Josh Cantwell here with Jack Petrick. Wanted to give you guys a quick update on the Heights Point 164 unit project in Shaker Heights, Cleveland Heights. Jack and I wanted to pop on the phone. I know a lot of you guys have questions about the progress and the project, as well as obviously any kind of impact that we're seeing regarding the virus. So Jack and I just thought we'd hop on and give you guys a personal update here and shoot you out this video. So Jack, welcome. Thanks for hopping on, friend. How you doing?
Thank you very much for having me. And thank you everyone for not only investing in the project, but just taking a moment to listen to this quick update.
Yeah, you bet. First of all, one thing I want to talk about, Jack, real quick is just mentally, like psychologically, give everybody a little bit of some peace of mind. I just want to remind everybody we bought this building for $9.2 million. I had planned on putting about $400,000 or $500,000 renovations into it, closing costs all in for about $9.8 million, based on the improvements that we're going to do over time, the rent bumps, things like that. Property should appraise around 14.5 million and then be able to refinance. Many people are going to ask, well, what's going on with rent? What's going on with collecting rents and things like that? I just want to reassure everybody that, buildings like this, we're able to buy them at a discount, and your principal is not at risk. I think that's the first question people are going to ask, Jack, is what about my equity investment? Are we going to lose the building? What's going on there? Typically, we're into these buildings for about 65 to 70 cents on the dollar, meaning, to take all the income, subtract the expenses and the debt service, and we could have 20, 25, 30% vacancy before we're upside down. So just talk to that for a minute, Jack, about the model. Just remind everybody about our model for investing and how we protect them by buying deals at a wholesale price, and we have this big cushion, if you will, for vacancy before the building would ever be at risk.
Exactly. We bought the property at a substantial discount. So just a reminder of the backstory in this project. This was an off-market deal. There was a New York buyer that was coming in to buy the project, and our Marcus Millichap Cleveland franchisee, Dan, actually came in contact with this information, and he already had an established relationship with the seller. So he got a little bit fired up about it and said, hey, let me bring somebody to the table. And that's when we came in to take this project on. So, they were looking to exit the property. They had owned the property for over 20 years and did not go to market. So we were able to buy the property at a substantial discount. So, we bought the property somewhere in the mid 50s. And right now we have comps of just recently within the last few weeks of some deals that were similar that sold at $83,000. Similar condition, same location. So we already went into the property for equity. We also had some minor accounting adjustments too that have been beneficial for us. So like the previous owner was only claiming about $5,500 of laundry. We're running of laundry income from the washers and dryers, and we're running closer north of $25,000 because we're just claiming all the laundry income. Right. So if you take that discrepancy, you divide it by a 6.5 cap, it's over a $300,000 valuation bump before doing anything. Then we're going through the units, doing our upgrades in our kitchens and bathrooms, getting rents bumped up, doing our water conservation program, lowering expenses. So, I think always what's worked for me, and I know what's worked for you, Josh, is not buying at retail, buying at wholesale, buying at a discount, bringing operational efficiencies, increasing the income of the property, and that provides safety for us, on top of having great management too. Because in this business, operation is where the money is made. You can buy right and still screw a deal up, but if you buy right, you operate it right, you manage it right, you treat the tenants well, and you bought at the right property, at the right location, the right price, typically that's where it provides a lot more safety for us.
Yeah, fantastic. So close on the building. At the beginning, if you remember, it was already, I think it was 157 out of 164 units were occupied when we bought it. So there's very little turnover, in that first 4 to 6 months. We gave you guys all an investor update in January. And obviously it's been 3 months, and now we're in a kind of whole new world with this, coronavirus, COVID-19 virus stuff. The good news is as we record this, it looks like the virus is peaking or peaked in a lot of areas. And we're talking about reopening our economy. So let's just talk, Jack, before this virus. Why don't we just give everybody an update as far as like how many units were painted, how much of the renovation was done. There were some point of sale violations when we inherited. We got some concessions from the seller to cover those point of sale violations. Just tell us what's happened really since January, maybe leading up to about mid-March or late March before this whole virus thing broke out. What were some of the improvements that were done? What was the condition of the property at that point?
Perfect. So let's just start off with numbers. So right now we have, we have 164 units, and our goal was to roughly do about half of that. It might end up being a little bit more, but that was kind of like what we were just penciling out. So right now we have a total of 94 units that have been painted. So again, we actually want to push a little bit past that number, that 82. So 94 have been painted. So we pretty much we're checked the box on that. And right now we have a total of 94 units that have been renovated. So we're approaching 2/3 at this point, which is exactly where we want it to be at. We've got 24 additional units that are scheduled right now to continue the renovation. What I mean by that, when we started the project off, we initially were bringing in crews that they would take on the whole job. They would come in, they would take care of the painting, caulking, then they would proceed forward with countertops, flooring, cabinets, resetting the vanity, toilet, and all those items. And what really has worked out for us a lot better, a lot more efficiently, we found a number of painting crews, and they start off in the unit, and all they do is paint. They paint the cabinets, the walls, coat around the ceilings in the bathroom and kitchen if it's an occupied unit. If it's a vacant unit, we're doing a full repaint. Mm-hmm. But that way, they're working far ahead of us. Then we're bringing our crews in, and now they don't have to touch painting or drywall work. They're just focused on the build out. And that has been working out a lot more efficiently. And we've went through some crews, which was natural, to kind of get really dialed in. Mm-hmm. Right now, we have an Amish remodeling crew. They're coming in and they're getting, once a unit is painted, they're getting it done anywhere between a day to a day and a half. So they're turning the units over quickly. The quality is there, and it's been going. The turnovers have been going well.
Yeah, and we'll include some pictures for all of you guys. We're going to send out, PowerPoint with this. Should be attached to the email. Send some pictures, like kind of some before and after photos, so you can see what's been renovated: the kitchens, the bathrooms, the flooring, the difference in what the units used to look like. And remember, when we bought it, the units were in really good shape, but they were very like 1990s-ish. A lot of gold and white, really, really clean, very well kept.
Old cabinets.
But old cabinets, old and just not kind of modernized, if you will, for 2020. So that's the 94 units that Jack has already been working on turning those over and getting those updated, because the whole goal then is to bump the rents. So Jack, there was some point of sale violations that, exterior tuck pointing, some of those kind of things that we had to get done. Majority of that stuff's been completed, right?
So we have interior and exterior point of sales. The majority of the interior violations have been done. It's a very lengthy, extensive list, but most of it is just small loose ends, like a loose receptacle cover, adjust door striker. Like the city we're in, we have very high rents because it's a more affluent community, but because of it, the building department is definitely a little bit more picky with the work and such. So,
just a little bit.
Exactly. So the interior work, we still got a little bit more to go, but we punched through most of it at this point, and we're now just going on the exterior. Ohio's funny for those who don't live here. We were cutting our grass a week ago, and now we're sitting on a couple inches of snow. So with the weather breaking right now, we're going to start taking crews outside and trying to get those worked out, and working on that with the interior unit turns. So also, let me see what. Yeah, so I'm sorry. Go ahead on that. And your next thing.
So part of the plan. So let's talk about the larger plan, right? So we're talking about the 94 units that have been painted, renovated. There's another 24 units that are scheduled for renovations. And we'll talk a little bit about the virus and what's that's done, because a lot of the tenants that are there, obviously we're all in this sort of shelter in place order. People don't really want to have crews and strangers and contractors coming into their units to be turning them over. Everyone's just obviously fearful for their health right now. So just talk about this last now. Well, before we go there, let's talk about May, June, and July, right? So we started turning these units over. A lot of them are scheduled. So the plan was to really do a lot of the improvements while the tenants were in place, doing these improvements also so they could see like, wow, I got a brand new unit. This is amazing. And I'm paying the same price. Then when their unit was up for turnover and renewal, then we would kind of spring on them that the price was going to go up. Definitely kind of let them know something's coming, but now they would know if they want to stay, the unit's been renovated, we're going to increase the rent when they do their renewal. So just talk to that for a minute. We got a bunch of renewals coming up in May, June, and July.
Exactly. So the property manager there, Sheree, she actually carried over from the previous property, and she's actually a part of the family that sold the property to us. They strategically set all the leases to begin in springtime and basically, for the most part, end in August, because we have a lot of med students that come into like Case Western University and a lot of professionals. So it just, that really was the window where people were coming in and out. So right now in the month of May, we have a total of 47 lease renewals. In the month of June, we have 39. And then we're going to wrap up in July at about 12. And once we hit the end of July, there's less than 10 renewals that happen after that. So the majority of that is happening in this time right now. So, right now we've had a pretty high, relatively high rate of tenants renewing their leases with us with bumping the rents. But with these upcoming months, we will be losing some tenants, and that's totally normal. And we're just planning once that happens. If those units did not start the renovation, we would be adding those to the renovation count. So again, that's why there's a good chance we're probably going to be going north of 82 renovated units, starting off fresh in those and just moving on with them. So, right. But this really is our ideal leasing period. Even with my other properties, I really try to have my property managers not have lease renewals in December, January, February, in those months, because when it's cold and snowing, a lot of people are just not wanting to locate and take that decision, that move.
So let's talk a little bit about the virus. We're getting into this season where we're expecting a lot of units to renew or turn over, and we want people to stay and obviously see the improved unit and just pay the increased rent. So talk a little about in kind of real time here, what's happening now in April? What do we expect to maybe see in May? Are people seeing the rent bumps, the increases in the rent, and staying and re-signing? That's for the most part what's happening. A lot of people don't want to move right now, like just because of the virus. So tell us about what their mindsets are about signing, paying the increased rent, staying, sheltering in place versus moving out.
Absolutely. So for the most part, most of the tenants are staying. We have had a handful that have left, but again, with 164 units, that's completely normal. Right now, we do have 31 tenants where their apartments have been painted, but right now they don't want to have any contractors come in to come in and wrap up the last part of the renovation. So I really feel that, well, not that I feel, we actually have had some conversations and some news article briefings from our governor that we're going to start to reopen here in May. And as we're seeing things kind of calm down, I'm seeing that tenants are starting to relax a little bit more. And then another thing that's been really beneficial during this time is we've been actually very aggressive at leasing. So when things started getting a little bit shaky with COVID coming out and with stay-at-home orders and who's essential, who's not essential, we had to really make a decision. Do we continue on pushing the remodeling, or do we slow up for a moment to conserve cash, not really knowing what was going to happen because we've never been through this before? So we actually went the opposite direction and really pushed hard with marketing. And I've been really surprised that our leasing has been going better than ever. And what we found out to some extent is some other properties and property managers, they are holding off on leasing. They're not wanting to bring people in the property. And we are taking this seriously. We are taking precautions, but at the same time, if somebody comes in, to an empty hallway to go tour a vacant apartment building, we're not having the same risk exposure as bringing somebody into a nursing home with 150 people.
Right.
We're also being diligent, cleaning door handles and doing things of that nature. So Because we've been pushing on the leasing, we've been generating a lot of traffic. That has indicated to me they want to continue moving forward with the remodeling, not just here, but my other projects as well.
Fantastic. That's great. My newest and most powerful real estate investing book, The Flip System, is now available. And for a limited time, you can grab your free copy at getflipsystem.com/podcast. Using the same proven principles, secrets, and investing strategies I'm sharing in this book, I've been able to personally close over 750 highly profitable real estate deals over the last 15 years, make over 400 private lender loans, raise over $30 million of private money, and acquire over 2,000 units of apartments. Get my newest book now for free for a limited time at getflipsystem.com/podcast. That's getflipsystem.com/podcast. So I think the question on everybody's mind is, are rents getting bumped? And do we see any additional vacancy because of COVID-19? Like right now, and obviously this is a very short term, again, a health scare in the short run. This is not going to impact the long-term play with the building over the next 5, 10, 30 years.
Yes.
This is very short term. So we're treating it like a natural disaster, something that we have to take care of in the short run, almost like a hurricane or a tornado. And it's something that might impact the building for the next 1 to 3 months, but long-term is not going to impact. So if anything, worst case scenario, if we go to refinance and that refinance gets delayed a little bit, okay, but the building's not, at risk of losing the building necessarily. So in the short run, what is happening? Are we able to bump rents on those people that are renewing? Are we seeing any kind of additional significant vacancy, or is things kind of status quo?
So in the vacancy, we're not seeing anything other than what's been a usual vacancy. We actually have 4 eviction notices that went out right now, but out of 164 units, that's a completely normal.
Pretty darn good.
Yeah, like that, and that's just typical normal collections and operations and things of that nature. With those 4 tenants right now, the courts have been froze, been pushing things back a little bit, so might be an extra month or 2 before we get them out. But again, that's not going to affect or change anything on our end. And with those units turning over, we're going to do the same remodel on those things and those units, and then, continue to do the bump rent, the rent increases on those. So my goal is actually to try to, again, go north of 82 units, trying to get somewhere north of that. So again, just to kind of help out, just to continue to bring the income up a little bit further.
Yeah, it just insulates the cash flow. The higher the income, the bigger the building's value. Yes. And then when it comes to the refinance, getting in the highest value possible based on the net income is obviously the goal and the approach. So certainly hope, as we kind of wrap this up, certainly kind of hope by, let's say, July 1st, a lot of people are back to work. A lot of things are normal. Again, this is why you buy a really stable Class A building in a Class B or a Class A area. This is not luxury. It's still kind of considered workforce housing. A lot of doctors, nurses, students, things like that. But we're not in a C-class environment where people are losing jobs and can't pay the rent. We're also not in Class A luxury where people are losing jobs and can't afford a huge rent payment. If anything, those people that are in luxury who maybe lose their jobs would, quote unquote, I guess, downgrade, if you would, into a building like this, even though this is still an amazing building, because they maybe can't afford $3,000 a month for rent anymore downtown Cleveland, but they can afford $1,000 or $1,200 or $1,500 in a building like this. This is why you buy the product that we buy. So Jack, as we kind of wrap this up, any kind of final thoughts about what you think is going to happen over the next month or 2 or 6? And then, if anything on the refinance, kind of worst case scenario, maybe things get pushed back a little bit, affects the investor's return a little bit. But, again, not something we can really project right now, because if things hockey stick back, things could go back right to normal. But certainly not at risk of losing a building or not having cash flow to support the mortgage.
Exactly. And just let me just go off that real quick for just a moment. With all the investors that you have and that I currently have on this project and other projects, it's been really nice to be able to continue to be able to make distributions during this time. There are other apartment owners that are holding off on distributions, but more importantly, there's a lot of people that have lost a lot of money in the market and in other investments. So to be able to preserve that principle and still provide a return in a time like this, I think it just proves the business plan of what we're doing here and what we're investing in.
Right.
I'm definitely very optimistic with how everything is going. There was a number of weeks here where all of us were just kind of scratching our head, like, what's going to happen with all this?
Yeah.
Well,
the news that was coming out was so confusing. We would hear one thing, hear another. There was conflicting information. What was real? What was not? Social media has an impact on what you're hearing. And then, you and I are on the phone talking about, well, I just heard this. And you're like, well, I heard that. What's real, what's not, talking to attorneys, getting interpretations. That's all for the most part calmed down, which has been 100%. Nice. And now at least we know what kind of environment we're operating in. For a week or two, it was all the new stuff coming on with Governor DeWine. He was very proactive in Ohio as far as going into shelter in place very early compared to other states. So we were really proactive in getting in that. But it was confusing for a week or two, as everyone should expect. But now things are... we know what kind of environment we're working in. Hopefully the state's going to open up here in the next 2 weeks. And we haven't seen any kind of significant downturn. If anything, people are still moving. Jack's being aggressive with the marketing to fill up units, which has been great. So Any other thoughts, final thoughts, words of encouragement, ideas, anything else we want our investors to know, Jack?
No other updates at the moment. We're definitely happy with the progress where we're going. We're happy with the team, the communications within our team members. Our supply of material has been coming in well. We haven't seen any disruptions on that. And I was thinking there was a possibility we could experience that, but we were trying to be very proactive with that. We've been very proactive with our property manager, with the guys that we have on staff, with our 1099 contractors. And I just feel that a real big piece of this is being active, knowing where our chips are at, where we strengths, what are our weaknesses, how do we protect where we're vulnerable at, and we just have really been doing, I think we've been very proactive at doing that, and also just tenant communication as well, and also communication with investors, and just trying to keep everybody on the same page, because it's been a wonderful experience in this property, and we just want to continue this time, get it to the finish line, hit the refinance, and then we'll move on to the next one.
Yeah. And relative to the refinance, just to add some color to that, banking is obviously very different today than it was 3 weeks ago. And so a lot of the multifamily bridge lenders that were giving bridge loans even a month ago are no longer in that space. And Jack and I talked about this. It's not really meaningful to speculate where lending and banking will be, because we're not really set to refinance this building till the end of the year, beginning of next year. And we think a lot of things are going to normalize. So although like some lenders are totally out of the business, other lenders have tightened up some of their guidelines. But on some of the new purchases that we've done, we've gotten the best financing terms we've ever gotten. So there's benefits to some and negatives to other, but it's not really even meaningful to speculate, because we're not really set to refinance this thing for about 9 months from now. It's not really meaningful to speculate what rates and terms will look like. We expect them to pretty much normalize. And at that time, we'll kind of see what the market's going to give us as far as refinance percentages, cash out refi proceeds. If we have to put money in escrow, we'll obviously just get the best financing terms we can to put on the building for the very long term. We'll make that decision when we get there. And obviously, there's a lot of upheaval in the banking industry right now, liquidity issues, Federal Reserve pumping money into the system. And it's created some unknowns. But we're not set to refinance this building today anyhow. It's going to happen around 9 minutes from now. So let's see what happens over the next quarter with banking, and then talk about what does things look like in maybe Q4, Q1 of 2021. Then it'll be meaningful. Right now, it'd be purely speculation anyway. So sure. I think that's important to say.
One of the advantages, though, that's going on is interest rates are about the lowest they've ever been, too. So we're taking advantage of that. So, I guess one of the things, the message I just had to the investors that I work with at all my other properties is, like, when things are uncertain and unknown, this is oftentimes when the most money is made. Like, I remember, Josh, when we were getting together years ago, and I was in the single family space, and houses that used to sell for $120,000, I was buying for $4,000. Then people thought I was crazy. Today I'm a genius, but it's because I was able to see the value of what it was, and ignore and just like plug my ears and all the hearsay and social media content, everybody's opinion of everything, and know what a solid investment was. And I focused on that, and it paid really well. More money is made on down markets than up markets.
Right.
You can buy everything at a price point or a discount that you couldn't buy when the market's doing well. So even with everything that's going on, just don't get distracted with all the noise of what could happen, shoulda, coulda, woulda, worst case scenarios, and everybody's fighting on Facebook on what they think they know what fact is. Like, focus on the opportunities and look at that solid assets are going to survive in this situation.
That's fantastic. Jack, thanks so much for hopping on. I look forward to getting this investor update out to our people and our members. And, look forward to doing more deals with you, of course, as always in the future.
Awesome. Thank you, guys. Appreciate it.
So guys, there you have it. That was our investor update on the 164 unit Heights Point property. I hope you really enjoyed hearing that live update in real time from Jack and I. Jack, as we kind of wrap up this particular podcast and investor update, I know there's lots of listeners who might want to reach out, maybe joint venture on a deal, have some questions about multifamily investing. Where can people reach out to you, touch base with you, get to learn a little bit more about your business?
Yeah, Josh, thank you. If anybody would be able to go to our website, which is petrickpropertygroup.com, and just the spelling, it's Petrick, petrickpropertygroup.com.
Fantastic. That's awesome.
And if you guys enjoyed this interview, definitely share it on social media, share it on all the different, podcasting networks, iTunes, of course, YouTube. Let us know how we did. Leave us comments and questions, ratings and reviews. Thank you so much for taking a listen today, and we'll talk to you soon. Take care.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities. To start your journey toward the lifestyle you've always dreamed of, apply for coaching at joshcantwellcoaching.com.